What is going on, traders and investors? It's Stas here. Welcome back to another video. So we have to go over 5 oversold stocks that I'm looking at right now, 2 of which just reported earnings, and we have to break them down in this video. So let's just dive into it. If y'all find value, hit the like button, make sure to subscribe, and don't forget to get your 10 fractional shares of the Mag 7 stocks for a Moomoo. Just use that link down below. Go to stassurfest.com/Moomoo or check out the QR code right here. Get your stocks, guys. And with that being said, cheers. Let's dive right into the video. So overall, it's currently about 2:15, 2:20 p.m. on the East Coast, and we have all the indexes pretty flat on the day, where we have the S&P up 0.1%, same with the Dow, the Nasdaq's pretty much at break even, and we have the Russell down about 0.25% as the metals are selling off as well. We have silver, which has been crushing it. That's down about 0.8%, and we have gold down over 0.5%. So we're pretty flat on the day, guys, although the intraday chart here on SPY actually looks pretty bullish. It looks like we're taking out the highs from earlier today. We're making some higher lows as well. You guys see that? And we're starting to move to the upwards direction heading into close, which is good. You're seeing that same thing here on Triple Q, right? We just took the highs out from earlier today about 20-30 minutes ago. We hit about 455, and earlier today we were struggling under 454, so we got out of there, guys. We're above the highs from the pre-market, which is great. So even though we're pretty flat, we're at break even, I could argue that the bulls are in charge right now, and we're going to close on a nice upswing. As of now, at least. That's kind of what I'm seeing right now. So let me just dive into the stocks, guys, very quickly. Again, 5 oversold stocks that I'm looking at right now. Number 1 is Lowe's, ticker symbol LOW, which they just reported earnings, and their stock's down 2.6% on the day. So Lowe's reported earnings, adjusted EPS of, let me see here, guys. Let's see. Actually, no, GAAP EPS $3.06, which beat the $2.94 expected, and sales came in at $21.36 billion, which also beat the $21.12 billion expected. So double beat for Lowe's. And let me see, it looks like they affirmed their full year 24 outlook. Total sales of $84 to $85 billion versus the 84.43 estimate. All right, EPS of $12 to $12.30 versus the $12.19 estimate. So pretty good outlook there for Lowe's. And again, they double beat. So let me see, why is the stock down about 2.5 to 3%? Looks like Telsey Advisory Group maintains market perform on Lowe's, maintains $230 price target. All right, anything here? Looks like FDIC chair to resign, yada, yada, yada. That's not about Lowe's. Yeah, I'm not really seeing anything here as to why we're selling off, but at the end of the day, guys, we are selling off. It is what it is, and that's after we were up to almost 240 in the pre-market. So initially, when the earnings came out, we were up 3%, but now we're down almost 3%, and the chart doesn't look that bad on the yearly. I mean, look, we're pretty much at the 180 SMA on this one-year chart right now, and we're approaching the highs from the middle of January, early January, late December. We're approaching those highs and looking to potentially hold them as support. So overall, Lowe's is very oversold on the yearly chart, on the 4-hour chart. So let's see if we get some sort of consolidation, maybe a bounce back in this 215, 220 range after earnings that were pretty good based on what I'm seeing. So LOW is ticker number 1. Zoom is number 2, which in the grand scheme of things is very oversold on the 3-year chart, on the 1-year chart, you name it. This stock is very beaten down, and they just reported earnings, and their stock's down about 1% right now. So let me see what they did. Adjusted EPS of $1.35 versus $1.20 expected. Sales 1.14 versus 1.13 billion expected. So double beat for video or a Zoom video communications. It looks like they see Q2 adjusted EPS of $1.20 to $1.21 versus $1.23 expected. So a little soft on, EPS guidance for Q2. Revenue, it looks like for Q2, 1.14 to 1.15 versus 1.15 billion, pretty much right in line. And Zoom Video, full year 25 EPS, 499 to 502 versus the 491 expected. And revenue's actually pretty much right in line as well. So pretty good quarter out of Zoom, solid guidance. And to be honest, guys, how much lower could this stock go? I mean, I'm not surprised that we're pretty flat after earnings, and we've been flat for pretty much this entire year, even the end of last year. So I feel like all the bad news, all the, the post-COVID, decline, whatever, the post-COVID collapse in the fundamentals, whatever you want to call it, all of that's already priced in. So I feel like only up could be the way now. I mean, I feel like we could be breaking out at some point. But personally, guys, I'm not the biggest fan of Zoom. But do you agree with me on that in terms of all the bad news being priced in at this point? Could it even get worse? I don't know. Maybe it does. What do you think? But either way, Zoom's interesting. There's a lot of competition, keep in mind. But it is one that I'm watching here. We also have AMC, which is pretty beaten down, no doubt. From around $13 a share just about a week ago. Yeah, literally last Tuesday we were at $13. Now we're at $4.70. And look, the trend's looking pretty decent, right? We're above the moving averages still. We're actually consolidating at about $4.50, $4.75, $5. We've been consolidating there for about 3 to 4 to 5 trading days now. And I'm looking to see if we get the confirmation of a breakout, right? Maybe to $5, $5.50, $6, and who knows where it could be going from there. And full disclosure, I have a speculative options play here. I have some calls that expire on the 31st of May. They're $9 calls to give you guys an idea, so very out of the money, very risky. But hey, I figured let me play AMC, short-term bet, and if I lose the money, I don't give a crap, guys. It's money that I'm willing to lose at the end of the day. So AMC is looking pretty interesting. DKNG, DraftKings, is also looking interesting, down 3% on the day, down about $6, $7 from the recent $50 high, so about 12, 13% down, or in other words, we're in correction territory. And overall, DraftKings has been holding an uptrend. It's looking pretty good. We've been consolidating and slowly moving up over the past couple of weeks. So let's see if this continues. Maybe back to the mid-high 40s. Dare I say we go back to $50 on DraftKings. We'll see, guys. DKNG looks interesting here. And DG is another one, the last one on the list, Dollar General, which is up 4% at the time that I'm making this video. And you guys can see we're at $143 per share. Earnings are coming out pretty soon here, actually, in 9 days from now on the 30th of May. And listen, guys, if we take out $150 per share, let me set my alert there right now. Mark is at or above 150. We break out of the 180 moving average. This could be off to the races. We could be running. We could be continuing the uptrend, right? So Dollar General, DraftKings, AMC, Zoom, and Lowe's, those are 5 stocks that I'm looking at right now very closely, guys, and I'm in one of them right now as a very speculative bet. And all of these are trades, guys. I'm not looking to long-term invest in these stocks right now. They're all for trades. And of course, trade at your own risk. I'm not a financial advisor. And if you guys want to be a part of the Patreon where you get to see me build out my Patreon portfolio, which I've been doing for over a year now, you get all the buys, sells, all the results, full transparency, right? That's on Patreon down below, or go to stockssurfest.com/Patreon, or check out the QR code right here. And there's also a Discord chat. I post charts and ideas throughout the week on Patreon. So get in there, guys. I'll see you on the inside. And with that being said, cheers. Peace out.